Hello, Oracles. Well, Tesla stock crashes after the Fed meeting today. So what happened at the Fed meeting? So we had discussed it yesterday about how, we were looking at maybe a 50 basis point hike if the Fed was going to go more dovish. They ended up going with the 75 basis point hike that we had all anticipated. When the numbers first dropped, the market actually rallied. The market cheered this because we got what we expected. We expected the 75 basis point hike and it went up. Some of the language in the notes had mentioned how the Fed was going to use more forward-looking information as well to be able to gauge what they wanted to do for future hikes. This led the market to believe that they may end up going more dovish sooner. However, as soon as Jerome Powell started speaking, the market moved in the opposite direction that we had been discussing. Every other FOMC meeting that we have had this year, the market has come down after the release of the notes, and then as soon as Jerome Powell started speaking, we rallied afterwards. This time, it went the opposite direction. Jerome Powell, and you can see, I was watching the market moving as we were having him talk, and the moment he had said that the Fed might end up having to raise rates higher than they had initially anticipated, that is when the market started to sell off. So it wasn't the 75 basis point hike initially that what caused it. What ended up causing it was Jerome Powell saying that they might have to go higher. And now before we get too much further into this, I wanted to apologize. I have been extremely busy at my job, so I have not been able to respond to your comments in the timely manner that I'm used to, and I do apologize for that. One of the things that I like to do is be able to respond to you guys and have those conversations. You help build my foundation of the channel and my knowledge as well with our conversations, and I have not been able to do that, and I apologize. The second thing is I have some feelers out there right now, and I'll leave it out to you guys as well. I'm looking for a potential assistant. Because my job is so busy, there's a lot of things I can do with the channel that I just can't get to because I am so busy. So I will let you guys know in the future, but if any of you are interested in possibly helping me with some of the algorithms and underlying things that have to do with the channel, you could totally do it remotely. Let me know if any of you guys would be interested in doing so. I have some feelers out right now to a couple of my friends, so if they are not interested, I will definitely reach out to you guys and let you know. But again, let me know that if you are interested in the comments. So let's dive into what Jerome Powell had to say at the meeting today. So one of the things that he had mentioned was the fact that they do not want to loosen too early, that there was another indication that the Fed is not going to be going dovish anytime soon. And now realistically, this shouldn't come to any surprise to any of us. I think the dovish sentiment that a lot of us were thinking the Fed might have was maybe a little bit of a hopium thing going on. I know for me it was. I was really thinking that they were going to be going more dovish. Eventually, their language has really not changed all that much. They've been pretty hawkish all along the way, and it's not like super hawkish, but definitely a, hey, we are going to continue raising rates as we see fit. They have not made any other indication that they're going to be going any other direction, so they are still going to be going hawkish, and Jerome Powell definitely reiterated that today. And one of the questions that was asked actually led Jerome Powell to answer with three different questions, one of which is, what is the pace that they need to go out with raising rates? Jerome Powell had said himself that they've raised rates historically faster than any other time. They have gone up extremely fast, 375 basis points so far this year. That's extremely fast, and they are looking to be doing even more when we come to December. So at this point right now, we are anticipating a 50 basis point hike for December, but based upon some of the things that Jerome Powell had said, they might even be doing another 75 basis point hike in December. We will see. There's some data that we need to get through before then, so we'll find out later. But he said the pace that they're going at is very quick, but that pace might be slowing down due to the fact that they have gone up as fast as they have. The next question he had was, how high does the Fed need to go with interest rates? Some prior thinking was out there saying that the rates need to be higher than inflation in order to bring it down. He said that's not necessarily true. You can go up step-by-step increments as they are doing right now, and in turn it can catch inflation, and then inflation will naturally come down and then fall underneath the rates where they're at, and they're trying to find that balance at the moment. That is their mentality right now. So he did say that they may end up having to go higher than they initially anticipated, but we did not get any specific numbers about that. We know that previously they had talked about having the year finishing up at around a 4.6% when it comes to interest rates. So if they do another 75 basis point hike in December, that would put us right around that level. So we'll see what they end up doing in December, but he already indicated that they are probably going to be going higher than we had thought just because the inflation is not coming down as they had anticipated. The last question that he had is, how long do they keep these interest rates at an elevated level? How long do they need to be restrictive for? Well, that question there comes down to, well, how long is it going to take for inflation to come back in line? So maybe they do get themselves to 4.6% interest rates, and then we sit there for an entire year waiting for inflation to come back in line. So as again, they're going data point to data point. So if they're going month to month and they're starting to see it coming down, they can see how the interest rates are affecting the inflation, and then they can get it in line there. The problem they're having right now, which is the really tough spot, is that we have a very hot jobs market right now. They're looking to have the jobs market soften a little bit as well. We have the lowest unemployment rate that we have seen in 50 years at 3.5%. So that's very low, and they still have a lot of jobs that are getting filled up. There's a lot of job openings. So what's going to end up happening is they're going to have to be very restrictive with interest rates. They're going to have to restrict the economy so that jobs start to shrink. And we need to kind of get the economy back into a place where there's not as many jobs that are needed out there. It stinks, and it doesn't really feel good to say that, to have to really shrink this down and have people maybe lose their jobs. But in order to get inflation in line, that may be a necessary measure. This is what Paul Volcker did back in the 80s. He forced a hardcore recession to go on, which forced a lot of people out of their jobs, but it was able to get things back in line. Right now, the problem we have is no price stability. We need to get some price stability going on. Their goal is to get inflation down to 2%, and right now we are nowhere near that. So we still need to have the Fed being aggressive in their eyes. A lot of us have been having discussions as well of, we're having the same thoughts as Cathie Wood and Elon, saying that we are looking at having potential deflationary pressures coming in very soon, and we may hit this cliff. And so one of the things that Jerome Powell did say is it's not too bad to go and over-tighten. If they over-tighten, they can at least have the tools to kind of back it off, reverse course, and then kind of spur things back on again. This is a lot of times how they have handled things in the past. Most of the times in the past, they have done a little bit of over-tightening, and then they make that U-turn, and then the market starts rallying again. This is something that has been normal in the past. The bigger fear that he has is if they don't tighten enough and things start to run away. That could lead to even bigger problems. So he said it's worse for them to let things get away and loosen too soon than it is to over-tighten. He would rather over-tighten and then kind of let things out slowly and have more control of it that way. So I have a feeling we are going to be seeing a bit more of a hawkish Fed until we actually see inflation come down probably below interest rate levels. That is going to be my guess going forward. We've already talked about it on here before that we're most likely going to be seeing 12 months of more pain. Don't know how the market is going to react along that way. Probably similar to what we have seen this year. A bit of a bear market, some volatility up and down, maybe some little rallies here and there, but nothing truly going to gain some footing and really push us up until the Fed does end up giving indications that they are going to be making that U-turn. Now, one of the questions that he was asked was, is inflation becoming entrenched? And he did hesitate a little bit. And again, I talk about it when we talk about Elon and other people, and I look at body language and just reactions to questions. And this is the only one he really hesitated to. So he hesitated, and he did say that it's not becoming entrenched. They are seeing the things coming down. They are seeing numbers coming down. One of the things that they paid attention to before was the fact that, inflation was coming down and then it started to go back up again. He said that was concerning. He was pretty open about that. He said that was concerning to see it going back up, but now we are moving back down again. They want to see that trend continue. It's moving slower than they had anticipated, but it is coming down. So as long as it does not end up going back up again, he can feel comfortable saying that it is definitely not entrenched. So this is where his mentality is right now, and this is one of the reasons why they're staying hawkish, because they don't want to get into that point where they're going to have inflation that is entrenched. So all in all, I think the market was happy with a 75 basis point hike, basically because that's what they were anticipating. But what the market was not happy about was the fact that Jerome Powell came out saying that they may have to raise rates higher than they did before. And as we've seen all year long, as soon as we see what's going on with the rates, the market adjusts itself accordingly. So we had been priced in with a 75 basis point hike this time around and a 50 basis point hike going up in December. But right now, the market is looking at, we may end up going higher than what the Fed had initially said, so we need to price that in. And because of the fact that the Fed didn't give us any actual specific numbers on this, we don't know for sure. We didn't get to see the dot plot yet. The dot plot is where all the different Fed members come out and they'd say, hey, where do they think that we should be going with interest rates along the way? We have not seen that yet, so we don't know what their anticipation is for further rate hikes higher than what we already knew. So now the market is going to have more uncertainty with the notion that the Fed is going to be raising rates higher than we initially anticipated. So we may now see more uncertainty in the market. So again, not the greatest day that we saw today. We did have that question of whether Tesla was going to break out or break down. We did end up breaking down. We closed the day around the $215 level. I did add more myself at $217, just $10 at that point because I had been adding quite a bit at the lower levels. And right now, I truly don't know where we are going to go. I thought for sure we were going to be getting something at least decent out of today. Might see some green. Midterm elections going on next week. See some more green. And then we can maybe see some good news coming out of Tesla in the next month. At this point, I don't know. Now it's going on with what the market's thinking. Maybe we end up rallying tomorrow. Maybe this is just a market manipulation fake out and we're going to go green tomorrow. I don't know. Right now, the market is so uncertain. It's very hard to predict anything. This is just why I prepare for the worst and then hope for the best. And I just kind of set myself up to be able to adjust to whatever the market is doing. We can't control it. All we can do is react accordingly to what we think is going to be going on. And that's it. And again, as long-term investors in Tesla, it truly doesn't matter. I still think all of these prices are amazing to buy at. And in looking at the charts, and I apologize I don't have them up tonight. I got home late from having my son. But looking at the charts, we did break out of that downward trend, and now with the downward candle that we had, we actually closed back into that trend. This is something that we had discussed, was the fact that we could break out and then have that dead cat bounce and then break back into the lower trend, and we ended up doing that. So tomorrow will be a good indication. If we do end up pulling down further, we are going to go back into that downward trend and continue that way. So just things that we're going to monitor. And tomorrow night, I will be able to go on here and give you guys all the visuals on that as well. So just something to pay attention to. Again, not too concerned about it long term for myself. I'm actually excited. I know a bunch of us have been talking in the comments as well. We don't care if the price is going to stay depressed for the next year. That just gives us that much more time to buy. So for me, I'm okay with it. I'm good either way. But you guys can let me know in the comments below how you feel about this, what you think is going to happen. And I mean, personally, I think the Fed is going to end up going more dovish a lot sooner next year, especially if they're going to go more hawkish now. And you guys can let me know your thoughts in the comments below if you think the Fed is going to go more dovish earlier than we had initially anticipated. Thank you all so much for watching. I appreciate all of your support and feedback. If you have not subscribed, please do so down below. Sign yourself up for notifications. I am over on Twitter at OracleTim1. I share all of the latest Tesla news, pertinent stock market information, and all of my daily trades. We do have a Discord chat. That link is down in the description. And if you'd like to support the channel any further, we do have a membership program and a Patreon. Those links are also in the description. Thank you so much. Have a great one.